to another stock market live stream. Oh lordy, here we go. Okay, so welcome on in, everyone. It looks like we had a little bit of a frustration there on the cues, revisiting, looks like 617. Let's go find out. Yeah, we were right at 617 right now. We dropped through a little bit. We're getting a bounce again here. Now, this is very interesting because yesterday, we talked about it, but it was true. It was absolutely true. Yesterday, in the Alpha report yesterday, we said, hey, watch 617 if we end up going down at open. And then we ended up buying the dip right about here. And some of our favorite stocks. And the market really recovered almost all the way up to 627, broke through on Broadcom earnings, then the Broadcom earnings call comes out. Now, Broadcom's having a whole bunch of poopy-doopy. So this morning, but in our Alpha report this morning, I said, I'm bearish the rotation out of hard asset chips. And if you notice, since this morning, Broadcom has tanked off a cliff even more. Nvidia went red. Oracle went red again. And you're seeing this, what this really is a signal as, where's CoreWeave? I'm just looking for CoreWeave here. This is really just a signal that people are frustrated with the spending that's going on, because these are not actually terrible valuations. So we look at, let's say, Oracle's valuation. It's trading for under a 1 peg. The valuation on Nvidia is like 1.4. I mean, let's go look at the actual valuations on these puppies, because the valuations are not bad. When we do our analysis, the fundamental analysis we do every morning in the Alpha report, we consolidate this. AMD's at a 1.21 peg, right? If I go look at, let's see here. So let's find Meta. Meta is at a 1.25 peg right now. Netflix is at a 1.75. These are low for these massive cash cows. Nvidia's at 1.6. The Micron's at 2. It's like one of the few that's up at the higher region over here. Here's Oracle. Oracle's at 0.91. That's how low Oracle has gotten. We looked at Rivian this morning. We did some more analysis this morning on a few different things. We looked at Archer Aviation this morning. Symbotic, another one. That one's at 1.92. Walmart, though. Walmart is at a 4.4. That's crazy. Tesla is at a 6.5. Target is at a 2. So like, some of the valuations aren't bad. The problem is you're just getting a rotation of money out. Somebody says, what happened to you? Nothing happened. In fact, you can still get that data. It's just we are going to be transitioning to a desktop app over time. Well, I shouldn't say transitioning to, because we're still going to have the mobile applications, right? But there's the Meet Kevin app you can get for free in the Apple and Android App Store. You should already know that. I encourage you to download it. It's great because you can customize your notifications. But you can also get the data tab, which is where we're going to put some First Brands information in just a moment, because that's, I think, one of the reasons markets are nervous right now. But if you get, so we'll talk a lot about First Brands. If you get the MK app, the first thing you get is the data tab, right? So the data tab has all of this, Fed notes or whatever, SpaceX analysis. I mean, there's a lot. Political report, like there's a lot of stuff in here, and it's not written by AI, it's written by me, right? I did make a little note that we are closing the House Hack fundraise as well, but that's in the app, so that all that data is still present. You can get it in the app, and then in the future we'll have a desktop version of it. So yeah, okay, good. So let's go to. Can you explain the abbreviations, TOMO and POMO? Yeah. So TOMO is temporary market operations. That's typically the overnight purchases made by the Federal Reserve to support the repo operations. Basically, in English, they're trying to support liquidity in markets on an overnight basis. POMO is more something that could be like 6 to 12 months long, and I think that's actually what we're seeing. But it's hard to say, because when the Fed says we're going to buy T-bills, they could be doing TOMO or they could be doing POMO. So, it's tough. Somebody says, yeah, man, Meet Kevin app, very useful. Oh, thanks. That's from Chubby Reviews. Chubby gave me a review. I appreciate that. So how many times will we have an opportunity to buy Bitcoin under 90K? I know, I feel like we're about to get another chance to buy Bitcoin under 90K. We're going to have to send another tweet. Look at it. It bounced right on 90 though. So yeah. But yeah, okay, so let's go see what's going on with First Brands. And then, yes, we are, for the question here, we are closing the fundraise on House Hack at the end of the month. As somebody here says, Rivian go bankrupt. I don't think so. Rivian's got more than about 3.5 years of actually operating cash available. And, that does, in fairness, include their Volkswagen investment coming through. So they'd have less if Volkswagen, for some reason, was unable or unwilling to actually fulfill that obligation. So that could be a problem, in fairness. All right. So let's jump in here. So I want to look at First Brands. Here it is, First Brand. Okay, so this First Brand situation is a big problem. So their debtor in possession financing is collapsing, and this just doesn't happen. Like, you don't usually see debtor in possession financing collapse. In fact, I wrote down some notes yesterday, so we're gonna go jot these notes into the Meet Kevin app, and where you can get it for free. Okay, so this is gonna be First Brands Black Swan. I'm gonna call it the Black Swan because it's so rare. I'm gonna say that up front. It's so incredibly rare for dip financing to crash that this is either just a very horribly mismanaged fraud, or this is a unique black swan of fear that could spread to markets, right? This is going back to private credit fears, private credit disasters, all the nonsense. Okay, so let's explain this, and I'm gonna put some notes up here as well. Let me get my little screenshot that I edited. That was here, and then a little bit of history on these. We'll go jot down as well. So, what do we got here? Okay, so on the dip financing notes, we have, let's see here. Oh, did we also, let's just make sure that, yeah, okay, that's working. Okay, so First Brands. So the notes I have here are that Moody's found only one dip that resulted in less than full repayment between, 2000 let me see here, 1988 to 2008. Let me see if I could get a citation for that. Moody's dip financing, 1988 to 2008, because that could be one of the issues that you see here. Yeah, I found it. Only a, yeah, look at this. So here, at first blush, loans to Chapter 11 firms may seem highly risky to lenders. Oh, this is perfect. That's exactly what I was looking for. Because that makes sense, right? Loans to bankrupt companies. Like, if you're making a loan to a bankrupt company, logic would have it that that's, like, retarded. But you basically move to the front of the line of all the assets. At first blush. So at first blush, loans to Chapter 11 firms may seem highly risky to lenders. However, we show that all 545 DIP loans raised by 359 Chapter 11 firms in our sample receive full repayment. Moreover, our evidence on repayments extends Moody's 2008 research, which documents only a single DIP loan with less repayment, back to 1988. This is strong evidence that repayment risk is no worse than investment grade loans. So I think this First Brands issue is part of one of the reasons why we're seeing just an absolute, oh great, some Oracle data centers for OpenAI delayed from 2028 from 2027. Oh geez, okay. So let's throw that in here as well, because it's not just First Brands that's tanking the market today. It's also, let's put AI news here. Go Max, Carvana put. That's ballsy, man. That could do really well though. You know, if we keep tanking, Carvana would be a great one. Although I think it'll take a while for people to. They have to miss earnings. That's the problem with really short term. I think they'll have to really start missing earnings to really see them tank. But anyway, what was I gonna say? This is the Oracle news. Oracle delays OpenAI data center from 2027 to 2028. Some delays some. Okay, so let's push that through. But anyway, going back to this piece on debtor in possession financing, debtors typically look for debtor in possession financing as a source of operating capital while they're in bankruptcy. These loans are precisely structured to minimize repayment risk and are ultimately priced in terms of loans and spreads. Right? And so over here, our hand-collected data suggests DIP loan contracts designed coupled with substantial degree of over-collateralization effectively insulates the repayment of the underlying risk. Okay. So basically, it's exceptionally rare, okay, for a DIP loan to go bankrupt. And this is brought to us by ECGI. I don't know who the hell this is. ECGI. They are, it's a research firm on corporate governance. Okay, got it. So ECGI reiterated this, okay? This is what makes today's disaster with First Brands really bad. And let's take a look here. So I want to show this to you so you understand what's going on, okay? The easiest way to understand this is by zooming into this a little bit. All right, you ready for this? Okay, here we go. So here's what's going on. First Brands has a debtor in possession financing loan, okay? That loan is the orange line right here. And this gray line is the 100% line, okay? So that actually means it's been selling for a premium, which is normal for a DIP loan to sell for a premium over here. But look at what just happened in the last day, okay? That's a black swan, boys and girls. This doesn't happen. This is bad. It's bad. So this is, to me, this is a black swan. It's a signal that the Fed may honestly be too late at printing money, which starts today, as the cracks in private credit are really deep. Or it's, you know, as some bulls will say, just idiosyncratic, right? Which is just a way of saying, like, it's just First Brands. Maybe, but that's very rare. So I think this is a massive sector rotation. So, you know, and we talked about that this morning in our alpha report. So okay. I wrote, just to make a note. I just copy and paste it over here. This was part of our alpha this morning. Why does it do that? It deletes my copy and paste. There we go. I expect profit taking in physical chip exposure to continue. All right. So, alpha report pre-market 12/12/25, and that's exactly what's happening right now. If you combine Oracle delays, Oracle earnings, Broadcom earnings, and First Brands, you have a tinder box of hell today. Kind of sucks, but I think that's exactly what's going on. I'm calling it a tinder box of hell. Would it be insensitive to say that now is a great time to diversify into a real estate AI play, fundraising at its August of 2024 valuation? So like, you know, a 14-month-old valuation, suggesting you could get in at that old valuation before the funding round closes at the end of the month. I don't know. That it might not be the most appropriate time to do that, but you can go to househack.com or reinvest.co to learn more about it. Just make sure you read the offering circular because investment comes with risk. Anyway, let's go see what's going on in the actual sticks. So it appears we have another opportunity to buy Bitcoin under 90,000. That's interesting. And then it also appears we have again rejected the 6414 line, which has happened like 5 times now. And then it looks like, you know, somebody was calling for a V-shape on Tesla this morning. And I'm like, I don't know, man. Tesla's in no man's land. So I did not support a bullish move on Tesla today. And it actually made an opposite V-shape. Wow. Somebody says, last chance to buy Bitcoin under 90K today, I swear. Oh, like I can't send the tweet every day. Did you see Michael Saylor got summoned to JPM? No. What does that even mean, summoned to JPM? Like JPM's not a court. Yeah, this physical rotation is wild. Anything related to this physical space is just getting nuked. CoreWeave. Let's go to NBIS. IREN. Yeah, all of them. Nuke. Pretty rough, huh? Opposite V shape. Yeah, exactly. Okay, so let's see here. Okay, so let's go back to First Brands because I think that's contributing to the risk off behavior today, which isn't great. Let me also see what's going on with yields right now. So, all right, so I've got silver actually down 3.5%, so probably some profit taking. Oh my lordy, look at the 10-2. 65 on the 10-2. Wow. Yeah. This is sort of exacerbating the shock concerns, right? So if I go, let's slap that in here and combine that with what we're seeing with not only a rotation out of physical stocks, but the First Brands dip collapse. I don't think people are paying enough attention to the dip collapse. The dip collapse is a really big issue. Wall Street has been shaking by the collapse of the auto parts bankruptcy with more than $10 billion in debt, right? So going into this, just to put some more notes in here, this black swan, $10 billion in debt. Donating $5. My 457 will not allow me to invest. Yeah, usually 457s won't allow you to invest in private, venture capital style investments. That is unfortunate. No, we'd love to have you. So, honestly, the 10-2, by the way, this is the highest 10-2 we've had all year. The 10-2 is now worse than Liberation. The unraveling of First Brands Group has ensnared major financial firms, including Jefferies. Remember, Jefferies is getting investigated by the SEC because of this. Yeah. Yeah, we actually got a bunch of investors yesterday. I think we had multiple six figures yesterday, multiple six-figure day yesterday. And so, yeah, really good last 24 hours. Wow. So something to developer updates here. That's great. Yeah, we're hiring a couple more devs. But it's crazy because my little baby house hack went profitable for Q4, and that's including interest and depreciation, which is great. That actually means in Q4, we might owe taxes for Q4, which is crazy. But we'll be picking up our R&D tax credits, though, because we're actually doing an AI app. This is so cool. Like, Trump's tax stuff gives you R&D tax credits, too. This is, so cool. Unraveling of First Brands has ensnared major financial firms, including Jefferies. The First Brands meltdown came just weeks after the demise of the used car seller Tricolor. Exactly. Okay, so federal investigators are looking into circumstances surrounding the collapse of both companies. Right, the SEC is involved, which as they should be. Good. I support that. Cleveland-based First Brands sells a range of auto brands to companies such as O'Reilly, AutoZone, Walmart, later the year, Crown, blah, blah, blah. Company borrowed heavily to fund its acquisitions. Last 2 years, First Brands was failing to pay suppliers on time. Okay. Former employees familiar with the situation. The company filed for bankruptcy on September 28th after creditors raised questions during a refinance deal. Revelations from the bankruptcy further alarmed financial partners. The company has accumulated billions of dollars of debt that wasn't reflected on the balance sheet, raising red flags of its true financial condition. First Brands in a lawsuit accused James, the resigned CEO, for misappropriating hundreds of millions of dollars, which he denies, in his mansion in Ohio or whatever. Dude, the guy's got a huge mansion. Dude, I don't even have a freaking driveway. I always think it's funny. Somebody says, what is house hack resilience to recession? Yeah, I actually think it's really massive. We were just looking at Archer Aviation, and I actually wrote exactly that down. I'll show it to you. So this was just part of what we were doing in the Course Member Live, but I'll show it to you. I love you guys. And girls, the 5 girls, say hi to the 5 girls in the audience out of the thousands of men. Could you imagine if we had a Course Member club? It'd be a sausage fest. It'd be like meat sausage. Where did I write it down? Anyway, the thing is, Archer is a pre-revenue company, right? So you have to assume their balance sheet supports them. They do have 3 years of operating cash. They burn about 117 mil in free cash flow. But this is what recession insulation equals: not reliant on selling stock to survive, right? We made a note that, example, Carvana, right, is one of those. Carvana, SoFi, that's one of them, right? So recession, cash, and low debt or no debt. So I look at it and I go, house hack, for example, what do we have? I think we've got 9 mil cash in the bank right now, probably more, but some of that's going to renovation. So call it 9 mil cash in bank, no debt on all our real estate. So, no bank debt, basically, right? Kevin has no personal debt, which I actually think that's important. Like, that was one of the reasons I did it, is I don't want people to think that the CEO of HouseHack has, like, this insane amount of personal debt. And if there's ever a problem, like, you gotta, like, I don't know, there's some, like, oh my gosh, the CEO is gonna go bankrupt, or, like, there's no chance, because I have no personal debt, And I think that's the opposite of what you see with a lot of CEOs. They start living high on the hog, and there's a lot of debt. I actually think that's really bad going into a recession. And that's why I've been saying it for the last year. I'm like, get out of debt, minimize margin. Like, I put my money where my mouth is, whether I'm right or wrong, at least I'm going to be transparent about it. What are the financial practices that played a role in financial? Well, I want you to see what this debtor in possession financing thing. Where is here? This. Let me see if there's an update to this. Meat grinder. Yeah. No kidding. It's a meat sausage. Mm-hmm. All right, so let's see here. First Brands loan. This is the dip problem right here. So days after they collapsed into bankruptcy, the founder laid out a plan of Marathon Management and said, "Great company, bad balance sheet." It basically suggests that, oh, don't worry. They're trying to say the fundamentals are bad. We're just gonna bail them out, right? 2 months later, these bailout people are seeing senior debt crater at a speed that is virtually unprecedented. Kimberlyn, Tennessee writes, single mom, accredited investor here. Wish you had events near me in Tennessee. I always joke that you could add matchmaker to your role. Oh, thank you. That's cool. Yeah, we visited Nashville in, I don't know if you're in Nashville, but we visited Nashville in 2019. Fun place. So let's see here. As the loan plunged from 100 cents to 30 cents on Wednesday, finger pointing has been swift. Excuse me. So this is crazy, by the way. To have an asset, like to have a bailout company basically say, oh, good company, just needs a little bailout loan, and then all of a sudden they get screwed helping somebody do a bailout. Like, Bloomberg calling this unprecedented is underreported. Bloomberg calls it unprecedented, because it is. It is. I mean, as we saw with the other research right here, these dip loans, they don't go down. This doesn't happen, but now it's happening, okay? So this is bad. Big creditors, some blame big creditors for stoking panic. See, that's how the finger pointing always starts, It's like, oh, you guys are just causing panic. It's literally, this is turning into such an SH9T show. It's such a SH9T show. Some of the lenders are throwing shade, saying others are just causing panic. Like, that's exactly how crashes happen. Put together, the development suggests a deeper misread of the financial issues at First Brands. Now they have to do basically dip-on-dip financing, which is crazy. I've never heard of this happening so close to approval by court. Yeah, exactly. This is a former bankruptcy judge. A former bankruptcy judge is literally quoted in this, saying they've never heard of this happening before. That's crazy. Bankruptcy judge says they've never heard of this before. And they have 2 decades of experience in this. Yeah, that's wild. A new senior finance, like, how are we holding up right now? Are we? Tesla just turned negative.
Lost the lead.
Just an L in the chat for Tesla. Thanks for joining, Natalie. Oh, a girl joined as a member. Let's go. Shout out to the women. Okay, so see here, we identify genders. Okay, so, wow, we really just collapsed. When we lost 617, we lost 617. Wow. Okay, interesting. So, any new senior financing would require approval of 2/3 of current rescue holders. Advisors to the credit card, okay, lining up new working capital facility. Well, yeah, good luck. You know, I really need a banner, by the way, so I don't have to say it. But what we should do is we should do like a giant red banner at the bottom. House hack fundraise, so you don't have to hear it anymore. After December 31st, house hack fundraise closing December 31st. I got to do that. And I make a big red banner, and then I don't have to say it. Potentially, hey, but it's a good opportunity, in my opinion, to diversify. Yeah, we identify biological genders. Okay, potentially by executives. So a source close to a lending group leading negotiations with the company said that they were confident creditors would ultimately provide fresh rescue funds. Well, that's the problem. What if they can't, right? Others have expressed concerns they might fail to reach milestones. Like, if they can't, they now need dip on dip financing. If that fails, the company goes to Chapter 7. This also has the potential of really freaking out private credit, because if dip financing in private credit can evaporate 70%, which is usually considered safe, what else is going to evaporate, right? It's not good. Wow. Yeah, can you get a default swap on a default swap, right? We're going to need CDSs on CDSs. Oh, that's funny. It's a funny line, but we didn't do it that time. This reiterates why the Fed is panicking. Okay, this First Brands issue showed up Wednesday. Okay, so Andrew Tate and the Mets. Andrew Tate, I'm not a big fan of. I think he's got some things that are nice and like motivating for people, but I think he's a slime bag and a liar. But that's just my opinion. I think people should almost do the opposite he does when it comes to women. But what do I know? So let me go to CDSs. Oracle 5-year CDS. Okay, Oracle CDS should have updated now. It seems to take a day to update. Oh! Yeah, okay, it just popped even more. So Oracle CDS has just popped even more. Idiosyncratic, just like Celsius, right? Exactly. Significant risk transfers last week? Of course. The risk transfers are, joke. Oracle, let's put that up here. That would go here. Okay, so Oracle CDS. Oracle CDS is 134.48. New recent all-time high. When's the last time we saw that level? Yeah, I'm at 134.48 right now for the pricing on the CDS. And that surpasses the previous high Previous high was 128. Let me see exactly what it was. 128 on 0.14 on 12.2. And if I go out to... We briefly hit 120s during the chip recession of September 2022. And then, but this is the highest since 2008. Highest now since 2008. Okay, that's not great. So, all right. So maybe I'm missing something. I don't actually think of Andrew Tate as somebody who is an example of how to respect women, but maybe we have different definitions of respect and we can agree to disagree. All right. Oracle CDS hit highest level since 2008. Nothing. Oracle credit default swaps. I'll explain. CDS credit default swaps hit highest level since 2008. Nothing to see here. Wow. That's crazy. That's crazy. Okay. Okay, so now let's go see. So that's Oracle. Finishing on the first brands, lack of visibility, key reasons why loans slumped. Runs circulated by traders show bids as low as 30 cents by Wednesday. They rebounded to 47 but remained deeply impaired. Bids were 42 cents on Thursday. So that's a massive decline, honestly. Andrew Tate and Bonnie Blue, best role models. Oh, it's sad. You know, I like women can make a lot of money on this whole like OnlyFans or whatever, but I mean, talk about, you know, tilting your lifetime reputation, eh? I mean, it's basically you're a paid whore, right? But who cares? Maybe there's a lot of money in it, and you're okay with that. You know, so, anyway, brokers noted that hundreds of millions of dollars of paper has traded hands. Money managers offloaded chunks of a loan. Distressed funds have been stepped in at deeply discounted levels among the buyers. Both are now part of the lead creditor group. Strategic value partners. First Brands declined to comment. Marathon sold its entire stake at or above 105 cents on the dollar. Ah, what? The same people? What scumbags? What scum? You gotta be kidding me. What scumbags? Oh my Lord. Bro, the same scumbags that are like, guys, everything's good. They sold their whole position before it tanked. Oh my Lord. Would you rather have your son come out as Andrew Tate or your daughter as Bonnie Blue? Wow. Well, I'll piss off the Tate fans with this. I think that Andrew Tate is probably worse because what he's doing is blatantly illegal. You know, if it's true, who knows? Maybe it's just the system, alleging things. But you know, there's like, if it's true, we don't know if the allegations are true. You know, some of the things you see aren't that great. You know, rape and human trafficking is really bad and blatantly illegal. The Bonnie Blue thing is gross, but it doesn't rise to the level of that criminality. So they're both bad, but one's worse. I can't believe we're having this discussion. I mean, the market's tanking. We're just trying to get distracted here. But anyway, look at this. Look at these scumbags. So look at this. Just as like pure scumbag. Look at these scumbags. Literally in one breath, great company, bad balance sheet. In the next, we sold our entire stake at a premium right before the collapse. Right before a 60% collapse. What a scam, dude. Wow. Wow. All right, do we have any bounce yet here on the queues? So, Tesla's trying to bounce, or sorry, this is Broadcom's trying to bounce. Then you've got, did the Tate stuff, I mean, not that this really matters right now. Let's see, Tate legal issues. Let's see if he's got anything left. I honestly, I don't follow this crap, honestly. I really don't care, but I'll look really quickly. So where do we stand? Trump administration, Dicot later issued a statement making it clear Tate still faced their case in Romania, but had been granted the request to leave. So they still face, what is this? They will be expected to return to Romania. So that was as of February. The case is still up against them. Judicial custody, allowed to communicate. Then you've got, that was September 5. Well, that's out of order on here. I don't know if that's from 2024. That might be. Arrested in the United Kingdom, United States. Initial investigation after their arrival in Florida. So they're getting investigated in Florida. Their Romania case is still going on. Their United Kingdom case has 21 charges against them for rape, bodily harm, and human trafficking. None of these look dismissed. I don't know. Maybe it's the chief magistrate said the brothers' financial setup was a straightforward sheet of the revenue system disguised as a complex financial matrix. Oh, so that's what Andrew Tate meant when he was talking about the matrix. Disguising how to scam basically the United Kingdom of tax revenue. The three are accused of paying no tax. Interesting. Wow. 21 million pounds of revenue, and they scammed their way out of paying taxes. So I don't know. I mean, maybe all of this is just a lie. You know, we all know Wikipedia leans pretty far left. Here's a dismissal of a defamation case. Defamation is very hard to prove, because you also have to prove damages and stuff. So, you know, it looks to me like they still have a whole lot of crap going on. So, I don't know, like, somebody in the chat, like, donated money to say, oh, it's all dismissed. I'm like, all right, well, it doesn't look like it's all dismissed. But anyway, all right, enough about that. Sounds Epstein-like. Yeah. Everyone loves a good lie. Yeah. Somebody says he's a fraud, posed as a Muslim, preached against degeneracy, but owned multiple casinos and now promotes online gambling. Enough about, look, listen, everybody can choose their role models. I'll put it this way. I will not allow my children to see any Andrew Tate content until they're 18 and they can make up their own decision. Somebody says, why are we upset at them avoiding tax? Don't we all try? You know, I mean, you have to understand that there are legal ways to reduce your taxes by actually following the law. And then there's scamming the law. So, like, if you underreport income, that's fraud, right? Or if you set up a shill entity, that's fraud. If you actually look at the law and say, oh, okay, I can not pay, as an example, I cannot pay sales taxes on the purchase of a jet if I follow these rules, then you follow the rules, you document the rules, and you legally did so. You know, that's very different, very different. You know, I think people shouldn't excuse frauds when courts are telling them they're frauds. So, okay. So this First Brands issue is an issue. Then we have, let's go see what's fresh on the Doomers, because the spread just went to 66. That's not good. So we have Oracle. Let's go look into this Oracle delay here. Somebody says, do you agree with Whistling Diesel? Well, I made a Whistling Diesel video, and I think you have to understand that if you watch the full video, you will recognize that if you actually have a legal business in Montana, then Whistling Diesel's fine. But if he actually set up a sham entity in Montana, then he's not fine, right? So, yeah. Oracle has pushed back the completion dates for some of its data centers it's developing for OpenAI. Okay. The delays are largely due to labor and material shortages. Okay. I always wonder if this is like, you know, what if this is a lie? I'm not trying to be like a jaded, you know, person here, but I have to ask myself, what if this is a lie, right? Like, what if this is actually a way to hedge a slowdown at OpenAI, right? Like, let me see if I can show you something. So chat.openai. Where is it? Somewhere here, I'm trying to find the subscription here. Account, would it be under account? Account. Yeah. I got it, boys and girls. Okay, you ready for this? Oh, this is hilarious. Oh, you're gonna love this. You're gonna love this. I'm connecting dots. I'm connecting dots, boys and girls. Everything college football says. All I can say is, as a 25-year-old in today's climate, a lot of what Tate says is highly accurate, especially with women who have only regressed. Are you single? I have seen a lot of single guys in their 20s extremely jaded against women. And unfortunately, let me just say this, and this is, you know, life advice, I feel like, from, you know, an old 33-year-old. A lot of single men who are frustrated by women in their 20s are typically looking for the wrong woman. And there are so many wonderful women, and you know, they're just not going to pull their pants down on the first night, and that's actually a great thing, you know. So I think a lot of the jade that people have in their 20s is actually self-fulfilling. They get into this sort of doom loop of, oh, all women are a scam or whatever. And actually it says more about them and their lack of maturity. And I'm not trying to directly slam you. I don't know, maybe you're different. That's just what I've seen. You know, it's usually, you know, when people are pointing the finger all the time going, oh, women are a scam. They're all, you know, greedy bastard whores or whatever. And it's like, when I hear stuff like that, I'm like, you know, you point the finger like that, 3 fingers are pointing back at you. You know, maybe you're treating women like shit, you know? So anyway, that's just my take, all right? It's like, maybe, like, unpopular opinion, you know, just like, I don't know. So, Okay, so then look at this. Okay, ready for this? Look at this. I go, what if Oracle is delaying OpenAI data centers because OpenAI's code red is real, despite what Sam Altman says. And ultimately, OpenAI is signaling a slowdown in their growth and therefore long-term commitments, right? Sonny says Kevin is a shill for women. I'm okay with that. I love women. Okay. Sorry. All right. So what do we have here? So Oracle, look at this. So see below. I canceled my GPT subscription and went to Gemini a few months ago. Now, GPT is offering me 100% off on the $20 plan just to come back. So I think it's actually really interesting because you could kind of link these things together. So, wow, dude, the queues keep going. Yeah, that's crazy. Somebody says, why gold tanking? Well, you know, you have to remember that gold really had a momentum run, a substantial momentum run. And, oh no, look, CoreWeave just lost the 79.27 line. Dude, this morning in the pre-market, it was at $86, right? And I hate to be this person. I really hate to do this. I have to do it. I hate 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 to do it. Oh shit, where'd it go? Come on. There it is. It doesn't let me zoom in all the way. This morning in the Alpha report, I said it's really important that CoreWeave holds 79.27 because it's just an indication of, unfortunately, the profit taking continuing. So here it is, right there. CoreWeave needs to hold up 79.27. We barely got a recovery right there, barely. And one of the reasons we talked about that in the Alpha report this morning is because it's another retracement line, and CoreWeave has been in a terrible run, and it can't even hold up 79.27 right now, which brings it back to the low, consolidation that it is in or has been. So it sucks. Oh, thanks for the $5 Canadian, Matt. Somebody says, can you please share your lines on the queues? Yeah, I mean, 595's next, boys and girls. I hope we can recover. Well, actually, I have a 607. I have a soft line at 607. Then 595, I got a stronger line. Hopefully, we could recover 617 today, Somebody here says, I know you have been anti-margin, but these dips are always so short. Do you think now is the time to finally utilize those resources? Oh, God, no. Oh, my God. Absolutely not. No. Dude, come on, man. Listen, I don't want a recession, okay? But if we go into recession, I don't want a penny of margin. I want none of it. No. No. You think, bro, zoom out. You think this is the dip? You think that? This is what you're buying? You want it, like, you're asking me if you should go into margin right here at this end of the Nike swoosh? Hold on a second. Let's be reasonable here for a moment, okay? Let's take a screenshot of this and let's just put into perspective what you just asked me, okay? So I believe you just went to the chat and said, Kevin, should I start loading up on margin at that dip? No! So let's put this dip into perspective, okay? Let's yeah, where is it? Let's see here. I think it's a tweet. Let's put this crash into perspective. There you go. We'll tweet that. Yeah, perfect. Boom. Okay, cool. So, anyway, let's go back to this Oracle crap. Somebody says, I don't know, man, I'm buying house hack on a credit card, 20K. Listen, yes, you can invest with a credit card. Please pay that shit off, okay? Like, I don't want you paying credit card interest rates to invest. Yes, if you read the offering circular, you go to househack.com and you want the exposure to the AI we're releasing. We're a profitable company now as of Q4, you know, through December 12th here. Obviously, shit could change, but like, you know, there's risk with every investment, right? I make sure I get my disclosures in there. Yes, you can invest with a credit card, ACH wires. There are no fees. You get the 5% yield, and it's but pay this off, okay? Like, if you want to get your points, it's fine. It doesn't cost you any fees. I get it. People do that. You can't use Amex though. Amex will not work. It will get rejected if you use Amex. Don't even bother using Amex. Just saying. All right. Oracle has been working to deliver on a $300 billion contract to supply computing power necessary to run OpenAI's models. Okay, so Oracle's working on wow, dude. Oracle has a $300 billion project for OpenAI. That's huge. I didn't know it was that big. I mean, I knew it was big, but I didn't know it was 300 bill. Okay. Oracle and OpenAI declined to comment. Duh. We have ambitious, achievable goals for capacity delivery. Interesting. Okay. How do I feel about recasting mortgages if your rate is 6%? I mean, recast is basically I paid down principal and I want to lower my monthly payment. I don't see a problem with it as long as it doesn't cost you a lot of fees. You know, you're going to be paying down less principal. I kind of like paying down more principal. In fact, I told somebody very close to me that if you have like a 7% mortgage right now, honestly, just pay that mortgage off. Like it's a great investment. Just pay your mortgage off. Just every month, pay that off. Dude, 7% mortgage? That's expensive debt, man. So let's see what else is going on over here. Fed's Foolsby. Oil man, I'm investing 20K into house hack. I need the rest for a trip I'm taking to Cancun. Good for you. You know, I'm a big fan of people like living life too. You know, you can't look at every dollar and be like, oh, I'm not going to go on a vacation. You know. So, Federal Reserve, Austin Goolsbee is projecting more interest rate cuts for 2026 than many. Cloud just donated $20 to say, just became a house hack investor, really excited. Thank you for the amount of work you do for everyone. Made a ton of money with your alpha reports, rolled it into house hack. Dude, let's go. That's awesome. Thank you so much for saying that. That's really cool. That's awesome. Okay, so I'm not hawkish for rates next year. I'm one of the most optimistic folks on how rates could come down. So why did he vote no then? The dissent aligned him with Schmid, who voted against the rate cut. Given that further inflation has been above our target for 4.5 years, further progress has stalled for several months. Okay, so Goolsby's worried about inflation. Somebody says, where's good skiing right now? I don't think there's really good skiing anywhere right now. Like, you're going to be... Like, I'm going skiing next Friday, and I'm kind of pissed Okay, like it will be snowing next Sunday though, I believe. Did CoreWeave regain 79? That's good. That's very good if we did. So it's trying to. It's trying to. Just got a new rewards card, 0% for 21 months. I'm going all in on house hack, leveraging everything. Stop. No, please pay this stuff off. I've been a member since 2020. Your courses are amazing, and I follow your path to success. I'm putting 50K on Monday into house hack. Oh, damn. Thank you so much, Eddie. I really appreciate that. Somebody says, do you miss the plane? No, actually, you know what's actually really funny is I have probably 10 to 15, depending on the duration of flights. I probably have like 10 to 15 free charter flights. So like for free, basically, because this is old money, I could go take like 10 or 15 PJ trips. And what I'm kind of laughing about with my family is like, I've recently needed to fly so little that I want to see how long I could stretch those. So like I'm gonna turn in one of the credits next Friday, but it's great because it's like, what if I could stretch that out for 3 more years? You know, it's like I just don't need it. So and I'm so happy I could just hang out with my family. It's fantastic. Like flying is a chore. So Goolsby, let's write this down. Goolsby. Is house hack profitable from its assets or investor contributions? You can't be profitable from investor contributions. That's not income, okay? House hack is Q4 profitable from income, which is rent, commission, software, less costs of goods sold, less G&A, less interest on bonds, less depreciation. Q4 equals profitable. Okay? Nowhere in that equation is investor money. So, and that's for the quarter so far through December 12th. You know, and we're still seeing people like, we don't even have a coupon expiration right now. We do have a coupon, but there's no coupon expiration right now for people joining. Like if you click Get Our AI, you know what a lot of people are doing is they're bundling. So they're buying the Meet Kevin Alpha report at meetkevin.com. And then they're using the course member coupon to get the lifetime access to the Reinvest AI. That's like the smart move people are making right now. But people are still buying this. So like, if we annualize out our revenue and these sales continue, we will be very profitable next year. I mean, knock on wood, we don't know. If everybody stops buying, you know, obviously then that is a problem, but this is just not what we're seeing in the data right now. So anyway, Goolsby. So Goolsby complaining about inflation, willing to have more cuts in 2026, and says he's optimistic for more cuts in future, but bearish inflation now. Okay. Okay, so we saw that. 10-2 curve, still at 66. Where is this Goolsby thing? Yes, people from outside the US can invest. We've got people from Japan, China, Canada, Germany, Italy, everywhere. Market crashing because Sam Altman's a fraud. I think Sam Altman is holding up the market. I absolutely think that. Yeah. You have a home on the South Shore in Tahoe? That's nice. That's very cool. Good for you. Somebody says, put 25,000 pounds in back in September. Can I put another 10K or does it have to be 20? It's easier if you do it in a 20 increment, but if you really, like if you've already passed the 20K limit and you want to do 10, you have to email us. We kind of have to manually do it. It's fine. You can. ir@househack.com. Okay, so let's keep going with Goolsby here. Okay, so yeah, House hack IPO. Well, I always say my goal in a house hack IPO is 2028 to 2030, absent some kind of crazy like recession or depression. So as far as Tesla's now down 1% too. Somebody's asking, can you explain the 10-2 treasury? Yeah, the way to think of the 10-2 is, let's actually see what's happening right now, because what you want to do is you want to look at the components, and there's a historical aspect in it, and then there's the day-to-day aspect of it. So the 10-year right now, the 2 years flat, and what's the 10-year doing? And the 10-year treasury is up. Oh, shit. Okay, so, all right. This is called a bear steepener. Let's put that right. You know what? I should really take this. Let me take this out of here, and let's explain that here. So the 10-2 at 66 due to bear steepening. So what bear steepening is that the 2-year is flat, 10-year rising a lot. This suggests the market. Thinks the Fed will have to cut more / print more in the short term due to risks, which could be inflationary, but then may stoke more inflation, right? That's risk. Now, why the 10-2 is so interesting is because historically, this is the historical significance. So, historical significance of 10-2, it has never gone into inversion and then recovered without recession, okay? We came close in 1995. We came close to inverting and then came out to about 0.55. Over 0.5 is usually shock level. Shock level is where like you just need a straw to break the camel's back, right? The camel right now, at least today, could be this First Brands disaster, but it could also be Oracle and Broadcom, could also be both. Looks like Bitcoin just regained 90, by the way. It's probably San Jacinto. It's probably because the prime rate just fell by 25 bips and SEO hasn't updated yet. David Sachs says, more jobs are being created by AI than being lost. I don't believe that. So, this is the Trump shilling, right? So, David Sachs of, I'm gonna write that. I'm sorry. I shouldn't write this. I'm not gonna say it. I don't want to get arrested. But David Sachs says more jobs are being created than lost by AI, and then sees China not accepting H200 chips as they are old generation. Okay. I don't know about that, but all right. I think that David Sachs of, and again, I'm not going to say it. I'll just leave it on the screen there. I think this is a convenient shilling on jobs for Trump, and it's likely untrue. It's likely false. So. Yeah, I honestly, I don't watch I haven't watched their podcast in years. But they do a good job as far as I'm aware. So Fed officials split over risk to U.S. economy. So Federal Reserve official. Okay, and we finished the Goolsby piece already? Oh no, we didn't. Okay. While Powell managed to secure votes on Wednesday for a third quarter-point rate cut, opposition against the move was more widespread than the two had suggested. Anna Paulson says a little more concerned about the jobs market than inflation, partly because I see a decent chance inflation will come down through next year. Labor market is okay, but downside risks are elevated. Before data went silent, there were some concerning readings. Inflation remains too high. Yeah, all right. Didn't you have beef with JCal last year? I don't know what douchebag you're referring to. Fed official split going into next year. But yeah, I did. I shit on his startup that he invested in because it was a real estate startup that I thought was a scam. And then he decided to text me and tell me that he was going to slice me up if I didn't stop defaming his startup. What a little bitch. So I bought life insurance. You can get it too at meetkevin.com/life. Oh, man. Okay. Fed officials, including two who will become voters in 2026, strongly offered opposing views. 3 policymakers. All right, this is all old. Let's go get some other news here. All right. So, yeah, turns out JCal didn't make the cut. That's a good one. That was punny. Oh, man. Okay. Oh, man. Okay, so, all right. Let's see. Okay, so, let's see here. What do we have? All right, Wall Street Journal. Okay, so, real reason Europe is decaying. Rescue at sea. Venezuela survived the riskiest leg of her escape. NASDAQ slides. Yes, we know. Behind the deal that took Disney from AI skeptic to OpenAI investor. Don't really care. Fed officials spar. Return scam. $400,000 of processing fake returns. Wow. Oh, man. A lot going on today. A lot of geopolitical news. Jeez. All right, let's go look at the info. All right, so Polymarket bets on OpenAI. Google raise insider trading suspicions. Well, no duh. Like, it's the easiest way for these insiders to make money. This has been true in elections as well. Like, usually people inside of election campaigns, they know, what's going on before everybody else does. Q's, by the way, trying to rebound over here. Interesting. We went all the way down to 211 over there. A lot of red. The only thing green right now is Netflix. I'm a big fan of Netflix. CoreWeave right back at the 79 line. Kind of important right there. What a sell-off. Okay. Let's go. All right, let's see here. By the way, I have this community phone number that you could join if you ever want to text I go in there periodically, and then it's actually me replying to the messages. If you want to ever message it, I have it right here. It's 805-398-6280. 805-398-6280. My community. What happens if I want to airdrop a phone number? What happens if I do that? But it's kind of cool. So I know some people have questions about, oh, that's cool. You can like sort of airdrop the contact card or whatever. That's cool. my.community.com/meetkevin. Oh, that's cool. Sometimes I go in there and I wish people happy birthday. Like I got 16 happy birthdays. Hey, it's Meet Kevin. Happy birthday. Boom. Send. See, like I wrote that. So yeah. Okay, cool. So then what's the information up to today? So the information was talking about insider trading. That doesn't heavily surprise me. Schlock Empire showed digital living can thrive in America. Poly market. Tech giants are partnering with Broadcom to break free from NVIDIA. OpenAI's Mickey Mouse deal. Private credit markets new target. Oh, okay. Let's go take a look at this, because the private credit issue is the problem right now. Okay, it's not every day we read about debt in this newsletter, but tech investors are increasingly paying attention to credit as a growing source of funding for AI. Well, this is exactly why you want the Fed bailout in private credit, because basically you Fed bailout banks, which can bail out private credit, which can bail out AI. That's why I made that video yesterday saying the Fed is turning on the money printer for AI. One big question going into next year is whether lenders will have the stomach to continue backing massive data center projects. What's the phone number again? Can't you rewind? In fairness, it's at 805-398-6280. Hi, Kevin. Happy Friday. Sup, Alex. Sup, Alex. See? Live. Come on, man. Push it. Buy the dip. Sup, Lewis? Yes, I love that song. Yeah. One big question going into next year is whether lenders will have the stomach to continue backing massive data centers. Right. A recent debt offering from Blackstone-owned QTS, the largest U.S.-based data center developers, points to a potential solution: private credit. Yeah. Kevin, make the market rebound today. I will invest everything into House Hack. Okay, there's only one way to do that. Stand by. Stand by. Let me get my market pumping forces up. Stand by. Okay. And activate in 3, 2, 1. Wait, no sound? Are you serious? How is there no sound? Oh, crap. I'm sorry, I went to go make a coffee in the meantime, and I totally ruined it. Oh, sorry. Lame. That's what happens when I go make a coffee and I don't do it right. Let me fix that for you. Oh, man.
man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you, with you. Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it. Oh my God, what's happening?
First of all this whining by Wall Street is making me sick. 140% of GameStop was short. GameStop was short. You can't allow Wall Street to short 75% of a stock, crush these companies into the dirt, thousands of stocks into the dirt. Then when the individual makes money, everyone's entrepreneurs. I have a kid who bought a house, paid $50,000 and bought a house. After decades of the shorts, you have to accept the fact that individual investors are playing the same game that you're playing and now you're losing.
Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it. Oh my God, what's happening? Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it, push it, push it, find the dip. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it. Oh my God, what's happening?
There's a lot of power in organizations online. 2 million people can get together in a subreddit. I think it's really funny that the GameStop stock is going up and just affects the market in that way. There's 20,000 people live in a Discord who are spamming rocket emojis, yelling, "Go to the moon."
So you might not know this, but I actually went to a FINRA advertising conference, and they're like, hey, we don't want rocket emojis. We think rocket emojis are financial advice, and we're going to regulate rocket emojis. And if you look at the caption here, they literally talk about rocket emojis, right? And it's crazy. Yeah, this is the good old days, man. It's great. So it looks like we're recovering here, which is great. So nice recovery-ish. I mean, we found a floor. We still have to regain 617. But yeah. Yeah. Somebody says this is what AI was made for. The irony of that is that was made before AI, right? That's like pre-AI. All right, so QTS last month sold $1.75 billion in debt through what's known as a 4A2 private placement, said one person with direct knowledge of the deal. The offering was the second in a matter of months, following $1.65 billion of debt in August. Private credit deals like this one are becoming more common as bankers work overtime to find money for data centers. My sources tell me. Yeah, I agree. I think they're running out of debt. Private credit, Morgan Stanley in July predicted private credit would provide $800 billion of the $2.9 trillion for data centers. Whoa! Dude, that's actually huge. Wait, so that all really connects the dots right there, right? So think about this for a moment, okay? So QTS, well, first of all, a QTS story, we'll say. Morgan Stanley predicted in July private credit would be responsible for $800 billion of $2.9 trillion in data center investments. QTS, which is, I think, what we say this is a Blackstone or BlackRock? Blackstone. Blackstone owned, did $1.75 billion in debt in November, and then they did $1.65 billion in debt in August. The information argues that bankers are increasingly Bankers work overtime. It's becoming, here it is. Bankers work overtime argues that currently bankers work overtime to find the money for AI data centers. Yeah. Yeah, that's very interesting. Now, understand this about the private credit angle here. This means that, look at that percentage as a percentage. 800 divided by 2,900, 27.5%. Expected from private credit. So if private credit fails, 1 out of 4, every $4 disappears, right? That's not good. That's not good. Did the buy the dip pump help? You know, I worked for Tesla. You know, that's good. That's very appropriate. We play the buy the dip song and Tesla pumped, you know. Okay. But yeah, hey, what a, you know, I think what's happening is I think the market is crashing and everything is basically red on the screen. I think what's happening is so many people are taking profits and investing into house hack that the entire market is falling. It's like the day after we announce the deadline that the fundraise closes at the end of the month, people are like, all right, time to ring the bell, take some profits and put it all into house. I mean, what can I say? Sorry, I guess I'll say that. All right. So as a consequence, expect companies like private issuers like Apollo to directly negotiate more data center deals. Blackstone purchased blah, 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 blah. Tech giants are increasingly eyeing private placements. Well, Meta did too. They've traditionally taken out bank loans, but why are they not? In contrast, under 4A2, they can't be traded, giving more flexibility to haggle terms and make them attractive to private lenders trying to generate above market returns. Oh, so more risk, basically. So, basically, oh my lord, poor child. Let me close the door. Sounded like summer. Okay, so construction for data centers used to be done by banks primarily. Now, the information, now 4A2 private placements are used to pump yields. Okay, but that's also comes with more risk. Okay. There we go. Okay, next. Diamonds and turds. Let's go see what this is. Okay, so we saw that. All right, so that's private credit. Oh yeah, when's Wealthfront gonna go public? Is it today? When's it actually gonna price? Let's go see him. Oh yeah, today. Oh, that's cool. That's cool. Well, what a day to go. Hey, look at that, dude. The Buy the Dip song. Let's freaking go. I think it worked. We're regaining this line. Now we just need to regain 617 over here. That's great. Okay. So now, let's see what else is going on. Okay. So we don't need that. 10-2 spreads still elevated. Private credit. What is this? 800. 800 million. Decline bankruptcy. A lawyer for First Brand said its attorneys found $0 in certain accounts earmarked to repay the debt. Right. So, they opened the books and they're like, wow, this is more of a fraud than we thought. Okay, got it. NASDAQ drops as 30-year yields jump. Yeah, well, not only that, but the 10-year was popping off too. These are it's because of the money printing concerns that it's going to generate inflation. So if I go to, let's just go to the 10-year. I just want to see the 10 for a moment. 10-year treasury is at 4.9. Wow. And then if I go to the 30-year treasury, wow, 4.85. So we have been here before. So it's not like we're at all-time highs or recent highs, not necessarily all-time highs, but recent highs. Okay. So yields up. So let's take a look at this. Broadcom, backlog of products. We expect many more orders to come. Dizzying run up in the shares. Outlook. Let's see. Spending in data centers left investors skittish. This is just I think a normal kind of rotation away from some of the risk of data centers right now. Private credit's probably part of that. Okay. What is this? Oracle's $300 billion AI bet has become a bubble barometer. Oh, that's awkward. They put him in a bubble bath. Okay, fine. Trump, Ellison, blah, 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 blah. Okay, I don't care about this. All right, so we got the First Brand story. We heard about the delays for the Oracle data center. Let's go see what some suits have for us. Golden Dome, astronomical cost, blah, blah, blah. All right, let's go look at the suits. Fed independence just got a bit more secure. Fed official split. Hammock prefers slightly more restrictive rates. What? Federal Reserve Bank Hammock of Cleveland said she would prefer rates be slightly more restrictive to keep pressure on inflation. That could also be driving yields higher right now, is all this Fed speak about concerns about inflation, right? So there's a lot of this right now. Let's go here. Where was the Fed speak part? Fed speak is up here. Hammock also complaining about inflation with Schmid. This dissension at the Fed sends a signal to markets that inflation is still a concern. Thoughts on the OCC giving conditional approval to Ripple, BitGo, Fidelity, Digital Ashes, Passes, oh, that's great. Yeah. Well, I think stable coins are fantastic. I would love to, do like, how cool if in the future we could do like house hack investments or whatever through stable coins. I mean, it would reduce. It reduces fees, it increases transparency, it increases speed, it reduces labor costs. I don't have to, think about it. Like, an easy example for the stablecoin news is, if you would, a lot of people right now, they'll send us a wire. They'll be like, Kevin, here's $100,000, and they invest in house hack. Cool. Then we have to collect their ACH information, because, it doesn't come through. Like, when you wire us, it doesn't tell us all your information. So, then we go, all right, 5 divided by 12, we got to send you $416.67. So now we got to send you an invitation to give us your bank account information, fill out your name, bank account, routing number, or whatever. And we have to link that to your investment and account for it. And so now You fill out that information. You get that $416.67 per month through conversion. So we manually have to set that up. Then we have to account for it every month and link it to your QuickBooks transaction or whatever, right? To your ledger, essentially. And all of that is really manual, and it takes a lot of time, and then auditors audit it and make sure it's all done correctly, right? That's a pain in the ass. Stable coins, it's like this crypto wallet invested, and then you can just do a smart contract that automatically gives you your distributions right back to the same wallet address that invested. It's like, you cut out all the bull. It's great. Stable coins are great. It's very good. Very good. Somebody says, market selling down if the Supreme Court U-turns on tariffs? No. Market will skyrocket, dude. I totally disagree. I think it's great. I get the idea that there'd be uncertainty, but it depends how the Supreme Court rules. If the Supreme Court says no version of tariffs at all without Congress, great. If it's we're just going to kill IEEPA, then Trump's just going to pick all the other versions of tariffs, right? They need to rule on everything, and they know that. So, but yeah, I'm a big fan of stablecoins. That doesn't, so I could be, like, I'm really bullish blockchain and stablecoins. I'm not the most bullish on BTCs right now, unfortunately. But you all know my take on that, and Michael Saylor, and that we don't have to go through that right now. Shares of companies exposed to AI came after a beating after Oracle delays added fuel to a sell-off already underway. Right, that didn't help at all. Oracle database software maker is pushing into the cloud computing. Delayed completion for GPT. We saw that, Bloomberg reported. Developments added to mounting concerns of the sustainability of infrastructure to support AI compute. Right. Right. Okay. Old news. CFT got. Same story. Trump and Bill Clinton pictured in newly released Epstein photos. Yep. Wow, these are interesting photos. Look at this. That's a picture frame of Jeffrey right there. Oh, then they covered up someone. How interesting. Oh, look, and whatever that is, like, it looks like a business card got blacked out. I love the double glasses, you know? Like, why don't you get some bifocals, bro? Oh my gosh, look at this. This is like, looks like a girl lying down or something. I can't tell. That's very interesting. How salacious. Comments have not been enabled for this article. Why is that hilarious? I don't know. Oh, boys. Yeah. What a show. Okay. So, let's go see what the institutions are saying. Maybe the institutions will have something to talk about. So far, we've covered all the boring stuff. Well, actually, some of this has been pretty fun. So, if Trump cancels tariffs, Trump will cancel the 2025 or 26 stimulus checks? Yes. Yes, almost certainly. Almost certainly. But I think that's his ploy. Like, that way he could go, guys, I wanted to give everybody checks, but the Supreme Court ruined the party. You know, that's Trump's 4D chess, is pre-manipulating what his, enemy is going to do. It's it's kind of brilliant. He's a marketing genius in that sense, All right. So, Rabobank doesn't have anything good for us. All right, what about our data centers? What is this? Are data centers really driving consumer electricity bills higher? A growing thirst for water. These are all different. We spoke to investors about AI. Okay, all right. Well, that's not so interesting to the market right now. I just want to focus on what's going on in the market. Macro, week ahead, JPM. These are dates. I mean, what really matters is jobs on the 16th and then CPI. But the problem is these numbers are already jaded because the Fed's basically like, don't trust the numbers. So that doesn't help. Okay. What is this? Central banks cut, hold, blah, blah, blah. Growing bubble concerns. Here we go. Okay, here's a Goldman piece. So let's pop this open. Pop this open like a little chair. Okay, don't say cherry right after Jeffrey Epstein photos. No, Kevin, no. All right. Where was it? I just saw it. Bubble. So here we go. We're also keeping an eye on the progress of AI in doubts. We find that AI-related investment growth remains strong. AI-related hardware shipments to the US continue to increase. Okay, recent data from Taiwan, so that's good. AI adoption rates have risen significantly since last year, though we think this is largely reflected in a change of wording. At the same time, AI bubble concerns continue to linger. Yeah. Following Oracle's disappointing earnings results, with investors now parsing Broadcom, we still believe we are not yet in bubble territory. We see value in diversification, and we're watching. We expect stocks with exposure to the middle income that continue outperforming, given our view that real income growth for consumers should accelerate next year, though the health of the U.S. labor market poses a key risk. Okay. All right, well, that's interesting. So, Goldman's basically saying, no bubble yet, but diversify. And in my opinion, that's exactly what people are doing. They're diversifying out of hardware, especially as the new vogue is everyone doing their own hardware. This is actually very Steve Jobsian. Very Steve Jobsian. If you do software, do your own hardware too, right? It's kind of interesting. Maybe what we need is house hack virtual reality goggles that show you the money. That's it. House hack goggles. Anyway, all right. So let me grab that. I think that's interesting. So that's Goldman on the AI bubble. Let's go see if there are, sometimes Goldman will have some trade ideas. Let's go look there. It's the market's knowledge that the Fed admitted that there are liquidity problems in the market and that they are probably worse than the Fed is acknowledging. Yeah, yeah, that's true. House hack virtual tours. Yeah, that's what we need. House hack virtual tours. We just did a really nice after. I need, before we look at more of this Goldman stuff, I need a review of the tiling I chose. I was really happy about the tile that I chose for a statement piece on the fireplace. And anyway, let me get into this. So I love these things, by the way. Like, I think these things are so cool. Look at this. How cool is this? We just scanned this yesterday. Bang up job too, because look at this. We got the whole front yard in there, the garage. Look at this bitchin' backyard. I mean, how nice is this? Like, this scan's freaking dope, man. I love this. You got this little, like, extra little bonus room off the side with another bonus room over there. Like, this is a great house. It's, this is, I didn't know what to do here, so I found this, like, custom tile just to give it, like, a little bit of a pop, and I really like it. Like, I think it's gorgeous, but, you know, it needed something. So, but, I mean, this place was pretty gnarly when we bought it, and it's pretty nice now, but it, like, these scans are so cool. You know, like, I think this stuff is awesome. Brand new kitchen, too. You know how much that range cost me? $598. Free shipping. It was great. I actually have the same one. I use the same stove as my rental properties. It's like, you know, we treat everybody equally. Anyway, so let's go back to Goldman. So Goldman Sachs. Goldman Sachs. So market today and thematic outlook, long depressed cyclicals, equity call, and morning trading upload. Okay. All right. Let's pop this all up. Open with. Those are Matterport scans. All right. Let's see what Goldman has. Economic research. Yeah, you know, I was just talking to an institutional guy, by the way, about House Hack, and they're like, "Wait, you guys are an AI company, and you have all this real estate that you own without debt?" Like, oh, that's interesting. You know, usually we just see AI plays and they don't have assets, and they're not profitable. And they're like, "Well, we're different, sir." And I'm like, "Oh, okay." All right. So focus this morning. Macro news is light. Yep, that's what I said in my alpha report this morning as well. Like, there aren't really a lot of macro caddies. The the Oracle news is probably the biggest thing. So they still forecast EPS growth next year. Weaker dollar. I mean, that's with 70 bips of profit margin expansion. And they should contribute, these stocks right here, these big ones, NVIDIA, Apple, Microsoft, Google, Amazon, Broadcom, and Meta, to contribute 46% of the S&P 500 EPS. Represents a decline from their 50% contribution in 2025. Wow. Wow. I mean, that's actually bullish, though, right? I mean, it's a Goldman forecast, but it is bullish, the market broadly. So, you know, I know we've got jitters right now, but I want to write that down. That's great. So bullish call by Goldman. But look at where the concentration is in the names that they chose. So it says Kevin wouldn't make it in LA. That's right. That's exactly right. I don't go anywhere near LA. I don't like LA. I don't do LA. I got nothing wrong with you people in LA, but I don't, nope, no LA for me. I went to UCLA. It's beautiful. It's probably one of the most beautiful campuses ever. I graduated UCLA. It's a great place, but I don't go there. All right, bullish call by Goldman. So this is very interesting. A 12% EPS growth forecast for S&P 500, but that's concentrated by 46% EPS growth contribution coming from 46% of that EPS growth coming from how many names? I think it's 7. 1, 2, 3, 4, 5, 6, 7 names. 7 names. House Hack Puerto Rico? Yeah, maybe one day. NVIDIA, Apple, MSFT, Goog, Amazon, AVGO, Meta. Yeah, personally, I'm a little partial to Meta right now. I'm a bit partial to Meta and Google. Meta a bit more given its recent sell down. But I think advertising is the next phase for AI because, like, as LLMs commoditize, you need to pitch the product, right? It's an idea. All right. Cool. So, how are the Qs? Okay, still trying to hold on there. Tesla's still green. Okay, let's keep going here. Goldman. We expect AI-driven productivity gains will lift EPS by 0.4% and even more in 2027. Interesting. Profit margins are the key source of difference. Oh yeah, Netflix obviously, yeah, as well, absolutely. You know, remember this, okay? Netflix, it's worth noting, calls their, Netflix calls their advertising revenue insignificant. That's a fact. That's in their earnings statements. They call their advertising revenue insignificant. To me, that's like extremely bullish, right? Because like that's a huge moneymaker for companies. And they're still calling that revenue insignificant. I'm like, oh, that's great. Netflix's current valuation is, let's go find out. So if I go up here, let's see. There we go. It's easier to do this in the app. These are all the fundamental analyses we've done in the course live. I've got the PEG ratio on Netflix at 1.73, which suggests Netflix right now is undervalued by 35%. Okay. All right, let's keep going with Goldman here. Flows, chart of the day. Blah, 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 blah. Oh, they've got real estate in here as well. That's interesting. They see real estate as the third largest EPS growth for 2027 and tied for second. Now that's very interesting. Goldman sees real estate as tied for second 2026 and third for 2027 in sector EPS growth. That's cool. I like that. I'm a little biased. Consensus bottom. Oh, wait. No, I read this wrong because EPS growth is here. It's second for 26, but 27, because the consensus, 27 is lower. I was looking over here. So it's actually just here. So it's not tied for third. It's actually lower. No, it's mid-range. So, and then I'll say mid-range for 2027. And mid-range for 27. That's interesting. Cyclical sectors should see earnings growth for next year, followed by materials and utilities. Huh. Interesting little outlook there from Goldman. Okay, so still see technology obviously as the leader, of course. Goldman still sees tech as leader, but real estate tied for second in 2026 for sectors. Okay. Cool. All right. Now, let's go into... So that was that Goldman piece. Let's go find another one. Long depressed cyclical. Long middle income consumer. Our economists expect slow job growth and elevated inflation weighing on consumer income growth, but a re-acceleration in 2026 will result from a stabilization of the labor market along with tax cuts. Okay, so this is also like bullish tenants, right? So, you know, I always kind of, sorry, I'm a real estate guy, right? Like, so that's where I put my head. Bullish tenants, bullish, perhaps travel, Disney, you know, Netflix, right? Best Buy, Six Flags, D&B, Target. AI productivity basket. Equity investors are trying to find out who the real beneficiaries of AI are. Our AI productivity basket launched in November, comprised of non-tech and non-AI companies that have mentioned plans to implement them. They include banks and insurance companies, huge. Retailers and warehouse, huge. Logistics, healthcare, and restaurants. I don't really know about the restaurant part, but absolutely, dude. Finance and healthcare, totally. So this is actually why I love, because I don't like banks, right? So I hate banks and healthcare, but but companies like Palantir, CRM, and Path, UiPath, right? I think their ticker is just Path. UiPath service these with LLM aggregators and agents. You know, so I'm a big fan of that. Like, I'd rather look for deals here than in those sectors. But I agree with this on the AI productivity side. Like, I think, you know, like, notice how they didn't mention real estate. Like, nobody knows how to do real estate AI. Let me put it this way. Nobody knows how to do real estate AI better than Kevin. I'm very biased. I apologize. But, like, frankly, most institutions don't focus on real estate AI, and they're blind to what can be done, and are blind to the potential. So that's, again, my biased take. But this is interesting. So Palantir, Salesforce, UiPath, I find those very interesting because, like, if you read the earnings call on UiPath, you'll find their partnership with these healthcare companies. Productivity and AI. Okay, so let's go here. Okay, let's put that up. Oh, what's going on? Oopsies. I'm making a little oopsies. Okay. There we go. Okay. Zillow got into trying to flip. You know, you have to understand very carefully that flipping is a very dangerous business. That's why we don't flip properties. Open Door, I think, is like their margins prove to you it's a very, very dangerous business. So yeah, keep that in mind. Okay, go. So Long AI volatility, AI politicization as we approach midterms. Okay, whatever, I don't care. Economic acceleration and AI adoption should support positive EPS. Yeah, that's fair. Profit margins are a key source of differentiation. AI CapEx to boost yield sensitivity and debt supply. More debt-funded CapEx could exacerbate these dynamics. What dynamics? The sensitivity of global yields to public debt is already starting to inflect higher, signaling heightened sensitivity to fiscal developments. A rise in investment to GDP around 2% peak on par with larger tech cycles could erode the savings investment balance and potentially see this sensitivity to... Gosh, would you freaking speak English? Jeez, who writes this bullshit? I'm sorry, I shouldn't say that. More debt-funded CapEx could exacerbate these dynamics, although we think it is ultimately the overall savings investment balance that matters most. Our economist baseline, 25 percentage point rise in U.S. debt to GDP. Such change would lift pressure on the 5.5s. Inflation dynamics. Global savings naturally adapt to rising investment demand. Significant expansion of global surplus. Okay. My takeaway. In English, as government debts go up, yields go up because investors think they're getting diluted by the government, which increases premiums sought due to inflation risks as well, which makes debt harder to get, which increases sensitivity of markets to higher yields, which means when data centers want more debt, investors get nervous. Maybe I got it wrong. You know, maybe I have translated this correctly or incorrectly. I don't know, but that's my in English understanding of me having attempted reading that nasty word pile of jargon. Nasty word pile of jargon. I gotta get that bad taste out of my mouth. Let me drink some black coffee to get that taste out of my mouth. Black room temperature coffee. Great. All right, light macro news, consumer earnings, Lulu, the guy, the CEO dumped. Well, he dipped out. Restoration hardware, housing recovery buying, Costco. Let me see their charts. How's RH doing? Somebody says that was probably written by Kamala Harris. People dump on her so much. I think it's hilarious. The one thing I will say that I can't get over is, and I don't know if it's true, but if it's true, it pisses me off, is that one of the reasons, and this could be a false rumor, but I heard that Kamala Harris rejected the idea of the Democratic Party doing a primary to find out who the nominee should be, because that would be stepping over a black woman. And I'm like, no. You know me. I'm pro-woman, and I don't care about the color of your skin. But we needed a primary. Americans deserved a primary. And like, leveraging, but I'm a black woman. Man, that's bullshit. That's just my take. That's just my take. That's my take. Maybe that's the unpopular opinion, but whatever. So Tesla's holding up, almost back to 617 here on the Qs. That's cool. So okay, good. Let's see what else. Let's see here. Okay, we go to Goldman's done, so let's go see what other institutional pieces we have. Active team folder. Let's see. So, Deutsche Bank would the real AI bubble please stand up? Ooh, that's a nice piece. That's on Nike. Yeah, Nike does seem, well, they've been on a downtrend, but I don't know that they're actually cheap. We'll look in just a sec. So, will the real AI bubble please stand out? Okay, let's take a look at that. That's a fun title. And then an unintentionally dovish cut. It's a weird way to phrase it. Okay. And then let me see what I have Nike listed at. So Nike, I'm pretty sure I've done some analysis on them. Nike. Nike's trading at a 2.27 peg. So it's actually surprisingly not that cheap, but it's potentially because, you know, markets have written down their earnings growth that much. Okay. So now, let's go see those institutional pieces. An unintentionally dovish cut. Powell doesn't drive the message home. We're expecting Chair Powell was unable to close the door as we were expecting. He was unable to close the door in January cut. Jan hold is Powell's base case. Yeah, that's fine. SCP, Hawkishleen, bottom line. Our base case remains that the Fed won't cut again under Powell. All right. That's Deutsche. All right, what is this? Would the real AI bubble please stand up? With valuations surging and the economy riding on AI capex, this is the top question. If it's a bubble, it's still in the early trade stages. Retreating now leaves risks leaving significant gains on the table. It was more than 3 years. What is this? Hold on. Retreating now, listen. It was more than 3 years after Alan Greenspan warned of irrational exuberance that the dot-com bubble burst. Basically, but the problem is jobs now, right? Basically, like JPM, Deutsche argues the bubble is still ahead. You know, the risk factor is the jobs market. Risk factor is jobs market. Okay. Dot-com bubble was really two bubbles. One was light capitalized, never profitable IPOs. The other were heavily indebted telecos with fiber. There is always more than one bubble at a time. Part of the issue comes down to naming. Okay. Yeah, valuations are nearing their historic peak. Yeah, red flag, number one. I mean, true, this is a risk. True risk. Investment data center capex might hit 4 trillion. And then remember, Morgan argues 27% of this would be private credit. Which is crazy. Okay, technology. Gen AI is flawed and may hit a wall. I actually agree with that. I do actually think that And this is actually a very interesting chart. I've never seen this before, but I think and I've maintained that the release of GPT was really just a step change up on an S curve. IMO GPT releases AI chatbots were a step change towards encyclopedic, AI, not Gen AI, which is fine. Like that, I guess I can't spell at all. When do you spell encyclopedic? Encyclopedic. Oh, I'm not even close. There's a whole cycle in there I missed. Anyway, so when you look at the GPT moment right here, you actually have to zoom in quite a bit. This is that step change. The step change is tiny in the grand scheme of this movement. Tiny. So, latency wall, training compute, and this is logarithmic. AI rapidly scaling may soon hit physical barriers, such as limits on how fast data can move between chips. Yeah, enhance. It's like the CIA, the CIA articles. Hey, Kevin, where's that step change? Enhance. Enhance further. Enhance further. I like how it actually lag loads a little bit. It's great. That's funny. Valuation. Equities are still at the low end of the post-2022 trend. That's interesting. I wish they would go back and show 2008 in that, though. Earnings growth. Right. Green flags. The highest valuations are non-profitable companies. Right, like OpenAI. So basically, the most profitable are the drivers of the valuation right now. True. Start of the AI cycle, investment hype and scalers, mostly free cash flow. Right. All right. Valuations are circular. What could go wrong? Now, this is interesting. This is an interesting chart. Look at this. Oracle buys 800K of NVIDIA GPUs. NVIDIA invests $5 billion into Intel. NVIDIA and Microsoft invest into Anthropic, who in turn buys $30 billion of compute from Azure. Microsoft invested into OpenAI. This is actually kind of funny. What a web. Okay. Investment costs are spiraling, forcing companies into debt. Right, this is the biggest risk in my opinion. The debt. Debt is the big risk. Debt is the big risk, always. At scaling shows diminishing returns. Developers may not keep finding ways to deliver value that work in the field. It's harder. Oh, I'm out of coffee in that cup. Rocket seems to be stuck. Well, yeah, because mortgage rates are going up. Totally reasonable. Political, supply bottlenecks. All right. I think the most interesting component here is really just investment grade debt issuance. And I think this is the big risk here. And notice how Meta's is blank. You know, because they loaded it all onto Blue Owl, right? So this is your real risk right here, this chart. And you can see all of them are at like the highest levels of debt with the exception of Amazon in 2022. And really, Meta should be... Oh, yeah. Oh, Meta's here. Oh, okay. Microsoft. Interesting, Microsoft. So I wonder if they're including the Blue Owl deal there on Meta. Okay. So, cool. Did we... Ooh. We're having trouble, aren't we? Look at that. Having trouble getting to that 617 line again. Bitcoin briefly dipped all the way down to 89.5. All right. Let's break this down. I gotta make some more coffee. All right. So let's organize what we have first, and we can actually break this all down. So we have this. We have... I don't really care about the Bank of America, so I'm going to close that piece out. Save that out. Then I've got... This doesn't matter. This matters. The sensitivity to debt matters. And that's pretty much it for this piece. So the debt sensitivity, that matters. Then I've got... This is bullish, so that matters. Bubble concerns on Oracle. But Goldman says not yet. And then, of course, the First Brands disaster. That matters a lot. Okay. So he says, if Househack strikes a deal with Airbnb, I'm in 1,000%. That'd be cool. Okay. All right. Then we had, let's see if there's anything new here. The information, nope, nothing new here. Nope. 10-2 spread's an issue, so we've got to cover that. And then that's all old news, so let's close out the vast majority of that. Okay, so that really leaves us with this. The Oracle delay part. And then First Brands collapse. Fresh rescue funds. The delay of the Oracle data centers. We know that's a big issue. We've got... And then the Fed. So you really have three things going on right here that we can talk about. The Journal have anything interesting? No. What about JPY, USD to JPY? I mean, that's always going to be a contributor, especially if the market starts trending down. But probably less of an issue today. Okay, cool. Alrighty then. Yeah, even CNBC's got their AI bubble fears. It's fueled by debt. That's the problem. Okay. So, let's do a little summary here. 3 things today. AI bubble, the Black Swan, and the Fed. We'll start with the Black Swan. All right, this is a lot. Let's get, gotta use our little brush here. Gotta get ready. Oh, and did we, somebody says gain the lead. How are we doing here? Oh, I mean, we're slowly getting back to 617. Got to get that, got to hold this line on CoreWeave. Pretty important. Netflix screen, Rivian's still doing very nice. Good bounce there at the beginning of the day. Circle lost 87 as everything started tanking. Warby's down 7%. They had a nice little run. The carry trade unwind. No, this is all Broadcom, AVGo, and debt concerns. Broadcom. Oh, you know what? Let's go look at their balance sheet really quickly. Let's go look at Broadcom investor relations. So, fourth quarter, just a quick look at their balance sheet would be very nice. This would be the press release. So, and it's their fourth quarter. So Q4, Broadcom, AVGo, press release, 12/12/25. Send it. Pop that puppy open. Let's see what their balance sheet has. Well, let's see. Balance sheet. I've got cash, receivables. I've got cash, receivables, and current assets of about, call it 30 bill. 30 bill cash receivables, right? Okay. Then I've got bills of 18.5 billion. So I have plenty of cash to pay my debt this year, but another 71 bill of long-term debt after that. You know, how long does it take to pay all that off? Well, let's see if we get a cash flow statement. Cash provided by operations is 7.7 bill, and that's for the quarter. That's in the quarter. That's actually really impressive. You know, that means they're doing 30.8 billion per year of cash flow. That's really nice. The problem is they're probably blowing all of it. No, they're not. So why are people so pissed? What am I missing here? I don't know why people are so pissed, because their plant, property, equipment expenses aren't that high. I mean, they got plenty of cash flow. You know, they're paying off debt. They're actively paying. No, they refinanced to pay dividends. So they took on a little bit of debt to pay dividends. So what the heck? What's their income statement look like? So, income statement, I've got, my lord, there's a lot of details here. Net revenues of 18 bill, gross margin of 12 billion, operating income of 7.5. It's pretty good, dude. It's pretty good. We coming back? Customer concentration in the earnings call? Huh. That's good. Yeah, okay, you got a little bit of buy the dip there, huh? Oh! Oracle is denying the report. Oracle is denying that there are any delays. Wow. Oracle denies the delays. Lol. Oracle calling fake news. That's funny. Oracle says reports of delayed data centers are fake news. Bullish. And yeah, what a whipsaw though. That's what's going on. Milestones remain on track. See if we could hold 617. Okay, let's go to Oracle. Oracle's trying to pop a little bit as well. And then what about all the others? NVIDIA, AMD, NBIS, CoreWeave. They're all enjoying this. iRen. Aha! Although broadly, you're getting stuck already at the Qs, huh? Very interesting. Well, okie dokie then. Somebody else says they're lying. I mean, it's possible, honestly. It's all possible. So... All right. Let's go break all this down. There's a lot to cover. Well, the market had a heart attack today, and there are 3 reasons for the heart attack. The first has to do with a major black swan in private credit, which is exactly what we talked about yesterday that the Fed is trying to solve. So we got a black swan in private credit. We got fake news, maybe, on an Oracle delay that gave the market a heart attack, and then Oracle's like, no, that's fake news, bro. We'll talk about that. And then Fed. All 3 of these things are big issues going on in the market right now, and you should know about all 3 of them. So let's break them all down one by one. First, there's something that you have to understand, and it's a little bit complicated, but I'm going to make it as simple as possible. When a company goes bankrupt, they take on something known as debtor in possession financing. It's called a DIP loan, okay? Now, you might be thinking, Kevin, like this seems so like micro. Why do I care about this? You're going to see how this relates to the Fed, how this relates to the entire economy. Because what just happened is a very rare black swan. This is very bizarre. You don't see this happen almost ever. And I'm going to give you these facts. A DIP loan is a debtor in possession loan. Usually, these loans are given to bankrupt companies. And we usually think, like, that sounds ironic. Like, why would I lend money to a bankrupt company? They're just going to screw me, right? The way it works is you go, hey, I'm going bankrupt. So companies come in and they're like, all right, well, it looks like you have some assets. We'll get in front of all of the other shareholders and bondholders, all the other debt holders. We'll help you get through bankruptcy, and we'll arrange financing for you based on what you have left, assuming we're in front of everybody else. Usually these loans sell for a massive premium because they're considered really good institutional debt. Like, they're considered safe. Maybe you shouldn't use the word safe, but they're considered safe, okay? Now, take a look at this. This gray line right here, you're gonna see, is the 100% value line for the bonds. That means they were selling for a premium, right? So the bonds are selling for a premium. This is normal for a DIP loan, okay? Well, what just happened with First Brands on the day that the Federal Reserve said we're gonna turn on the money printer, this could be directly related to why the Fed turned on the money printer. What happened with First Brands? Look at this. Oopsies! That 100% bond value collapsed 60%. This is on a company that has $10 billion in debt. This is not normal. It is not normal to see this happen. Now, to understand that it is not normal, I think it's useful to look at research from this company called ECGI. ECGI put this paper together back in 2022, and they talk about debtor in possession financing. And they literally say that at first blush, loans to bankrupt companies may seem highly risky. However, we show that all of the 545 DIP loan facilities raised between 22 to 2019 received full repayment on principal and interest. Full repayment. Moreover, evidence on repayment extends the Moody's research, which suggests that going back to 1988, there's only ever been one bankruptcy or like failure on one of these DIP loans, basically, which suggests that repayment risk is no worse than institutional grade or investment grade loans. So basically, DIP loans are designed to over-collateralize and insulate risk, right? But wait a minute, if these DIP loans are so good, why all of a sudden are we seeing a collapse of 60% on a DIP loan in the private credit market? Now, two things are possible here. One thing is possible that maybe First Brands just really sucks. But look at this, because this is really sus. The very company that goes in to say that, oh, First Brands is a great company, they just have a bad balance sheet, you should support First Brands in private credit. They're called Marathon Asset Management. The same company that said, oh guys, it's a great company, don't worry. The same company actually sold their entire stake in the new money portion of the bankruptcy loan at or above 105 cents on the dollar and dumped it all right before the collapse. So the same slime bags that said, guys, everything is fine, join the DIP party, dumped right here before the big dump. Now this sends two signals, that either Marathon is a scam or First Brands is just really, this was an oopsie doopsie and First Brands is really just worse than everybody thought. But collectively, all of this reiterates fear about private credit stress. And remember what we talked about with the Federal Reserve. The Federal Reserve needs to print money. Today is the day they start running the money printer to try to reduce some of the stress in private credit markets. Because if they provide funding for banks who are seeing money leave the banks to go to the Treasury General account because of tax collections, and the Fed is trying to refill money at banks, what do banks do? Banks lend to companies like Blackstone or BlackRock or these management companies so they can go make these risky loans. But the problem is, even they are bailing out on these private credit loans to where what's considered safe lending is becoming unsafe. That's a black swan. And I think that's why the Fed is turning on the money printer, because it is so incredibly rare to see what is considered safe in private credit flip on its head. And this is exactly why people are nervous about what's going on with this Oracle nonsense and the Oracle rumor that started circulating. So, first of all, I want to mention a couple things here. This morning in our Alpha report, I said that there is a rotation happening out of hardware plays for artificial intelligence. And I specifically named bearishness on Oracle, CoreWeave, NVIDIA, and AMD. And I said that we really need to maintain the 79 line on CoreWeave. We briefly lost that line. Fortunately, we've recovered that. But you'll find that we are well lower than where we were when I gave that warning to people in the Alpha report this morning. Even after this little pop-up recovery on Oracle saying the news that came out was fake news, we're still lower. And you're seeing that on NBIS, you're seeing it on NVIDIA, on AMD, you're seeing it on AVGO. Like if you were in the Alpha report this morning and you listened to me say, there is a rotation out of hardware, be careful, you would have been out at Broadcom at 387 versus the 364 where it sits now. So now Broadcom isn't necessarily a bad company. I mean, look at the balance sheet for Broadcom. It's actually phenomenal. You know, Broadcom has $30 billion in cash and receivables. They have $18 billion of bills. And sure, they have $71 billion of long-term debt, but this is a cash flow machine. Like, this company not only generates massive revenues and net income, you know, their net income is fantastic. In the quarter, they generated $8 billion of net income. But they literally have $30.8 billion of cash flow per year. They could pay off all their debt in like 2 years with this cash flow. And they're not spending a lot on CapEx. So some of this sell-off is likely very overblown. But why is it overblown? It's overblown again because of private credit concerns. Look, folks, Deutsche Bank is telling you what could go wrong in the investment bubble. Debt. Debt. Now we're going to talk about debt and how this relates to private credit. I want to mention this is exactly why my real estate startup has zero bank debt. And we do now have a deadline to invest. So if you want to invest in my real estate startup, we are closing the fundraise. I talked to the board. We decided that now we are profitable so far Q4 through December 12th, profitable, paying any, interest on our convertible bonds. We don't have any bank debt, so there's no interest to pay there. Depreciation, like all of that included, our revenues are greater than our expenses. We just went profitable in Q4, which is great. But we don't need to pay, we believe, this 5% plus upside anymore. And so we're going to close that round. Obviously, anybody who invests before December 31st locks that in. Real estate backed, invest with credit card, ACH, wire, no fees. Obviously, I encourage you ACH and wire. I don't think people should take on debt to invest. Read the offering circular. There's risk with every investment. But the board decided we're going to close this because we're dropping our artificial intelligence software this month. The revenues we're already seeing from our artificial intelligence pre-sale are really good. Like, people are buying this and the sales are great. And we're like, we're going to end this fundraising round and get a new valuation and raise at a higher valuation maybe in the future. But anyway, you can check that out. But the point is, debt kills companies in a recession. Debt kills growth. And it's not that people are really worried that Broadcom has a lot of debt because, again, in 2 years of cash flow, they could pay off their debt. It's the fact that the entire industry is backed by debt right now. In fact, I want you to see this. There is literally an information piece from The Information that reports that private credit bankers are working overtime right now to get debt allocations. The Information says bankers are working overtime to find money for data centers. Construction of data centers used to be done primarily by big banks. However, now the construction of data centers is actually being supported by what's called 42A private debt investments. That's a problem. Blackstone is doing this through their QTS fund. They just raised $1.75 billion in November. They're raising another $1.65 in August. And Morgan Stanley predicted in July, now this is a big deal too, Morgan Stanley predicted in July that private credit would be responsible for $800 billion of the $2.9 trillion in data center investments. I want you to put this to perspective for a moment. 27 cents out of every dollar that backs data center debt is coming from private credit. Do you see how this links together all of a sudden? So all of a sudden, you have this real risk that if we have a black swan in private credit, which you're literally seeing happening at First Brands, maybe it's unique, maybe First Brands is just a fraud, but you literally have this collapse of private credit happening in a way that we just don't see happening at First Brands. And at the same time you see this private credit collapse, you literally have Morgan Stanley telling you that 27 cents out of every dollar that funds data centers is coming from private credit. So, I'm trying to make it as simple as possible because these institutions, nobody's going to tell you this stuff in a simple way. And that's why I think I exist, to try to give people perspective in a simple way. And of course, shill my own stuff because that's my job, okay? I love HouseHack. I love my startup. I love the stuff we sell. Can you fault me? I feel like that's entrepreneurship. But look at this. Goldman Sachs writes this like really nasty piece right here about how like the sensitivity of global yields to public debt has already started to inflect higher. You don't even bother reading this bulk. Like I have trouble understanding what they write here because they speak in this jargon that's just like, can you please speak in American? So I translated this to freedom units and I wrote that in English, in freedom, as government debt goes up, yields go up because investors think they're getting diluted by the government. They are, by money printing. This is true. This is a fact. The Fed is printing $60 billion per month. Okay? They're back to printing. And now, look at this, which increases the premium sought or demanded on bonds due to inflation risks rising as well. That's the third problem today. Schmidt, Goolsby, Hammock, all of them are complaining like little weenie babies about inflation. So that's the third problem today. More on that in a bit. That makes debt harder to get or less desirable because you have to demand a higher premium, which increases the sensitivity of markets to higher yields, which means data centers want more debt, and then investors get nervous. Because when you go over here to Deutsche Bank has this giant piece on would the real AI bubble please stand up? And they actually make it clear that a risk to this whole data center boom isn't necessarily this, circular nature of all this crap. That's a factor as well. But it's right here. Debt. Investment costs could spiral, forcing companies into debt, more so than really ever before. So this makes sense. Like, this is all logical. And it also comes at the same time that we are stepping up against what is really this, this is a log chart right here of the progress that generative AI is making. And they call it a red flag. And I actually think that this is very accurate. I think that GPT releases were really a step change towards encyclopedic AI, not generative AI. I think that AI is really good at telling you data based on historic data. Like yesterday, I was looking at this historic data on our investments, like people investing into House Hack. And it was really interesting because we're getting quote unquote more whale investors. Let me see if I could find this. And I asked Gemini and GPT to take our data on investor amounts, not people's private information, just like the day they invested, and then align it with how should I put it? The day they invested. And then the size of their investment, right? And so what they decided is they made a cutoff at $50,000 investment. I'm trying to find the darn thing. Oh, there, I found it. They separated. They said anybody investing more than 50K is a whale, and anybody investing more than or less than 50K is considered retail. And what they said is at the beginning when we launched our Reg A, this is so blurry. Why is this chart so blurry? At the beginning when we launched our Reg A, we had the blue is more retail, under 50K investors. We were almost exclusively retail right here. And what they're saying over here is that we've had these like larger checks come in relative to retail. And, the conclusions the AIs were making on this sort of historic data were like, people with bigger checks are like, oh crap, like you guys are like onto something with this AI. And so you're getting substantially more big checks. But they also said there could also be a sign in there that, the smaller check folks are struggling more in this economy. And so you're seeing a higher percentage of richer people relative to the smaller checks. I don't know. I thought it was interesting. Who knows, right? But when you align it with what I'm trying to say here, with this sort of hitting the wall, I personally think that AI, and this is where I was going with this, AI is really good at analyzing patterns of the past, but not so good at generating future decisions. This is why I don't think we have such strong Gen AI that is prone to hallucination. And that's why I think on forward-looking stuff like artificial general intelligence, I think we're very far away on that. The problem with that is, if it's true that we're gonna hit sort of this wall, I mean, if you look at the data right here, if you look at this step change up of what the GPT 3.0 moment and 3.5 moment was, on a logarithmic scale, we're not making that much progress. That's a red flag that Deutsche Bank is arguing, without getting too granular here, right? And so that's the problem. When 27 cents out of every dollar that's going into data center expansion is driven by private credit that's now hitting a black swan at First Brands, that's really bad. The Fed is trying to bail out private credit. At the same time as you've got institutions going, yeah, AI is great. We could do a lot of things with this. Like we could do a lot to be practical today with machine learning. I think our real estate AI is it's pattern recognition. It's machine learning that we trained and we tuned to create real productivity today. That's great. But if people are investing as if we need data centers for artificial general intelligence, we're in a bubble, right? Because I don't think we're getting to artificial general intelligence. And if it's supported by debt that is now getting questioned, then that's a problem. See here, Goldman says, we're also keeping we're keeping our eyes on AI progress and doubts. AI-related hardware shipments to the U.S. continue to increase. At the same time, AI bubble concerns continue to linger following Oracle's disappointing earnings. With investors now parsing Broadcom's results, while we still believe that we are not yet in AI bubble territory, we see the value in regional and style diversification. I think it's really smart to argue for diversification right now. I'm not trying to say this to be like, oh, please go diversify to house hack. That's not my point. My point is, please, 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 please. And I say it almost every video. I'm mid-range. I'm 5.6 or 5.8 or whatever on the bear bull scale. The reason I'm not go YOLO margin. Somebody in my live stream this morning, they're like, Kevin, there's a dip. Should I go YOLO up on margin? And I was so disappointed that they said that. I sent out this tweet. I'm like, let's put this into perspective. Somebody's asking me to go into margin here. When you zoom out on the cues. What the hell? No, please, 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 please don't go into debt. Look at what's going on with the 10-2. We just skyrocketed on the 10-2. Why are we skyrocketing on the 10-2? We're skyrocketing on the 10-2 because the 2-year yield is staying stable and the 10-year is going up. So we're bear steepening. What does that mean? It means markets are saying, oh crap, to save private credit, the Fed's gonna have to run the money printer more, which means we have a greater risk of more inflation, which means 10-year yield premiums demanded up because you have to compensate for potentially higher inflation in the future because the money printing they're doing now to prop up the AI bubble because the Fed realizes the only thing keeping this economy alive right now is the AI bubble. And if the AI bubble goes because private credit support for this market is going away, then you got problems. So obviously today, when Oracle is we're delaying data centers, that was a rumor apparently. Oracle says fake news, right? Oracle's like, hey, we're delaying our OpenAI data center from 2027 to 2028. Oracle tanked. Then it comes out that, oh, it's actually just fake news. Is it though? Is it fake news? Don't get me wrong, I love my Teslas, but I've seen Elon Musk say, oh, that's fake news to reporting plenty of times, only for it to be exactly what was actually going on. And I look at OpenAI and call me jaded, but this is what I wrote, okay? This report says Oracle has pushed back the completion date for some models of data centers it's developing for the artificial intelligence model developer, OpenAI, to 2028 from 2027. I wrote, in response to this, the delays are largely due to labor and material shortages. By the way, all of this is in the Meet Kevin app, by the way. So if you download the Meet Kevin app, which is totally free, you download the Meet Kevin app, you could see this, right here. So you could kind of see that data and you can kind of see where I get this stuff from. And my citations, my sources or whatever. But anyway, so what did I write to this? I go, what if this is a lie? The delays are largely due to labor and material shortages. What if that's a lie? What if Oracle is delaying OpenAI data centers because OpenAI's code red is real? Despite what Altman says. And ultimately, OpenAI is signaling that their growth slowdown is coming. I canceled my GPT subscription and I went to Gemini a few months ago. Now, what are they doing? GPT is offering me 100% off. You've got 100% off plus for a month. So they're giving me 100% off to try to get me to come back. And I'm like, I don't know. That's incredible. It's incredible. So Then, I saw these comments from David Sachs. Now, sorry, guys and girls. I am not going to read this out loud, but this is what I call him, David Sachs of... I'm not going to read it out loud. Somebody left me a comment yesterday. Said, Kevin, I try to watch your videos with my family. You said a bad word. I don't know if I could keep watching. I'm like, okay, I won't say poopy doopy words. So anyway, David Sachs says, more jobs are being created than lost by AI. I think he's smoking dope. Like, I think he's smoking, some like deregulated cannabis here. Like, I don't know. He's on something. I think he's delusional to say that. And then sees China not accepting H200s as they're an old generation. I don't know if that's true. I don't really have a comment here, maybe. But I think this is convenient shilling for Donald Trump, and it's likely untrue. That's my opinion. Okay, so like when we put all of this together, understand that Oracle CDSs just hit an all-time high. The previous high was 128.14 on 12/2 for Oracle. We briefly hit the 120s during the chip recession of 2022, during that Q4 time, Q3, Q4 period. But we are now at the highest CDS pricing, credit default swap pricing for Oracle since 2008. Insane. Mind you, what I also think is really cool about our machine learning is our machine learning that we do with our AI at HouseHack, it's not just some like crappy wrapper or whatever. We don't actually rely on a lot of server capacity because we can analyze properties throughout the nation once and then deliver that analysis, to people paying for the service without rerunning the server compute multiple times for each person. So it's kind of like we have to run the compute once and then we could feed the answers through our SaaS. And we're like, that keeps costs way down. It's kind of clutch. Sorry, I get excited because I'm like, I see the problems, okay? The problems are in debt, but that doesn't make all AI bad. It's the problems are in private credit. And so this is why, people are concerned about the 10-2 rising and debt because that's the only thing propping this up right now. Let's look at some other institutional pieces because this is bullish also. Goldman Sachs actually sees an acceleration of AI adoption supporting earnings per share in 2026 and 27. This is bullish. They forecast an S&P 500 growth of 12% year over year in 2026. And they think that 46% of that EPS contribution is driven by NVIDIA, Apple, Microsoft, Google, Amazon, Broadcom, and Meta. Now, I personally am partial to the advertisers in this. Meta, Google, Netflix. Netflix calls their advertising revenue insignificant. I think that has a huge upshot. And Meta and Google are huge advertisers, and I think they all need to advertise their products. I think there was another piece about, here's another piece from Goldman about cyclical sectors should see an acceleration next year. They had real estate tied for second next year for growth. That was cool. Mostly, I think, because they see the middle income people sort of like actually getting back to real wage growth next year, which I think is supportive to rents going up. But anyway, they think that productivity baskets for AI come from banking, insurance, retail, warehouse, transportation, logistics, healthcare, and restaurants. My favorite plays there are things like, but Palantir's valuation is too high, but I think rather than picking banks or finance companies, I like picking the companies that support those companies. So a basket of those would be like Palantir, Salesforce, UiPath. Those I'm excited about. One of those I think is very cheap and is a very good opportunity. It's on our top 10 stocks to buy for the next 10 years list in the Alpha Report. Remember, the Alpha Report's that report I do every morning where I'm like, hey, here are the risks for the day. And you get that at meetkevin.com. And what a lot of people are doing is they're buying the membership, which now includes the Reinvest course because we just dropped that. They're buying the membership with the 9 courses, the trade alerts, the private live streams and everything. They're buying this, then they're using the course member coupon to buy the Reinvest AI. Not a solicitation, read the offering circular before investing in Reinvest. But anyway, what I thought was notably missing from their list was the amount of productivity potential for real estate that you can get with AI. And I actually think I'm ahead of a lot of the institutions on that because I see how I could turn AI into real productivity in analyzing the net worth potential boost that you could get from renovating real estate or acquiring real estate and prioritizing deals and doing that for agents as well. Automatic alerts from your agent on net worth deals. I mean, like, agents would love to pay for that, and it's a tax write-off for them, right? So anyway, I actually think I'm ahead of institutions on that, but if you disagree with me, that's okay. Look at these other categories. That's what Goldman is at least saying. But I also agree with Goldman on that. Like, that is where I think EPS growth comes from, and that's why I said in the Alpha report this morning that I think that you're seeing a fade away from the chip sector. From hardware. I mean, what did I specifically write in the Alpha report this morning? I said that CoreWeave needs to hold up 79.27, otherwise that's bearish. And then as far as I wrote, quote, I expect profit taking in the physical chip exposure to continue. And then parenthetically, I wrote AVGo, Oracle, AMD, NVIDIA. And then I also pointed out the amplification of the private credit stress, which is that First Brands problem. So, like, there are issues. Some of these things, though, they're going to create buy the dips in, like, the downstream profit potential that you could get from artificial intelligence. So that's why I kind of maintain, like, as long as the Fed's money printing can kind of save the private credit problem, you could plug this debt problem at these data center places and plays, and you could actually meaningfully recover. So we're really relying on the Fed to bail us out right now, because this First Brand stuff is bad, very bad black swan. And that's, look at this, the 10-2 spread just shot up to 6.7. No, not 6.7, no. Oh no, it's a sign. Okay, historically, why does this matter? People ask me, like, Kevin, why does historically this matter? Okay, so historically, the 10-2 matters for the following reason. The 10-2 has never, ever gone into inversion and come out without a recession. So understand that risk, right? And this is why I said to course members this morning, companies like Carvana and SoFi are actually, or even like companies that don't have revenue like Archer Aviation, have a very unique recession risk because they don't have cash flows to sustain the business. Like, we just went Q4 profitable. This is great because, like, with this applies to all companies. Use this as a lesson for all companies. But, like, we've got $9 million in the bank. We got, $80 million of paid off real estate with no bank debt. We've got cash flow to support our operations. Like, that's what you want. But like SoFi, for example, I love SoFi. Don't get me wrong. I'm a member of SoFi. But they rely on selling their stock to generate loans. A company like Archer Aviation relies on selling their stock because they have no revenue. They're pre-revenue. Carvana relies on insiders selling the stock to buy the debt that Carvana generates when they sell cars. So you're kind of like creating this cyclical, debt-infused, stock-reliant, like, process there. All of that collapses in a recession, right? So you want to be recession resilient. So ironically, that's actually why, like, Broadcom with these margins, dude, they are recession resilient. They're selling at a discount. So is Oracle. Oracle's got a lot of debt, though. I get it. I get why their CDSs are going up. But, these companies, their stocks can tank because of these debt fears, because the cycle might not continue. And then you have to write down growth rates. And then all of a sudden, their valuations look expensive. That's, I think, why NVIDIA is selling for a discount. Why is NVIDIA selling for, a 40% discount on their PEG? They should be worth $300 today. Well, it's because the market goes, if private credit plumbing doesn't get solved, that future growth collapses. So going back to the 10-2. The historical significance of the 10-2 is that we have never had an inversion of the 10-2 yield curve and then recovered without a recession. We came close in 1995, and we went to shock level in 1995. We went to about 0.55 on the 10-2 spread. But usually once we're over 0.5, we're at shock level. And then all it takes is a straw to break the camel's back. So why is the 10-2 at 6.7 today? Well, because you just had a black swan in private credit, which is the very thing supporting these data center buildouts, which is the very thing supporting the whole cycle of this chip euphoria. I mean, again, look at Deutsche Bank's piece on the cyclical investments of the AI bubble, right? So they here say that, Deutsche Bank, JP Morgan, Goldman Sachs, all of them, by the way, agree that the bubble is still ahead. Will the real bubble please stand up? Okay, all of them. Look at, they've got a robot blowing a bubble here. And they're like, it's true that, we have a red flag that we're at these high valuations and that maybe we hit a wall in terms of how good this AI actually is. All of it comes down to debt. Where is the cyclical, there? Like, yes, all of this can keep going as long as private credit gets plugged. I mean, look at this. Let's just follow one of these, okay? Oracle. So Oracle buys 800,000 NVIDIA GPUs and buys 50,000 MI450 GPUs from AMD, okay? Oracle then purchases 300 billion worth of compute. OpenAI purchases compute from OpenAI. Oh my gosh. OpenAI purchases compute from Oracle. But OpenAI gets investments from NVIDIA and AMD, and then OpenAI spends money on compute from Oracle, who's buying these chips. Like, the basic premise is that it's all a big cycle. It's all a big circle, right? And the better OpenAI does, the more the valuation of OpenAI rises, which props up the stakes that companies have taken in OpenAI for NVIDIA, AMD, or whatever. That's why when you hear Oracle saying, hey, there's a rumor that maybe our data center expansion will slow at the same time as people are freaking out about private credit. Wait, is it because of labor and material shortages? Or is this actually just a lie? And OpenAI's code red is true and their user growth is stalling. So they're like, hey, maybe we don't need that 2027 data center. Maybe kick the can down the road a little bit on that. And then because of OpenAI's request, Oracle delays the data center. And then that gets leaked as OpenAI's delaying the data center because of labor and material issues, because they would never want to say that OpenAI delayed it, because the whole Sam Altman Ponzi will collapse. So, yeah, we're at like a precipice of a pile of poopy doopy. That's why there's so much nervousness in the markets right now. And the Fed is literally printing money to try to stop this and prop this up. Now, unfortunately, we just rejected 617 on the Qs. Not great. Not great. Somebody's Freudian slip. They're all the same company at this point. That's a good one. I mean, hey, I don't blame you saying that. Like, it does almost feel that way, doesn't it? It's kind of wild. It's absolutely wild right now. David writes, excited to be invested in house tech. Well, thank you for saying that. Private equity, private investment, and credit are intertwined through co-investments. Private equity vehicles generally have a 5 to 7 year runway for funds, which means real pain could be unrealized for years. Yeah, but it's not just the potential for, the bankruptcies down the road. The real problem is that you gotta keep getting new debt. It's not the old debt that's the problem. It's we need all the new debt to come in. That's the problem, right? So, I don't know. That's why when people are like, Kevin, is now the time to YOLO on margin? I go, no, don't do that. I'd much rather turn garbage to gold and, take a little Ben Mala infusion there. Here's a property we just bought at a massive discount, for example, and we will turn this massive turd into something beautiful, just like we just did. Like, we just scanned this property 2 or 3 days ago, and we just removed this kitchen. I'm about to go film it, and I'll show you a video of it later. But and then we just leased this property out, which we just transformed. You can see new kitchen, beautiful cabinets, lazy Susans, beautiful backyard, blah, 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 blah. Look at our little candelabras. How nice. But that's what we do. And then AI on top of it, obviously. So anyway, you want to learn more about that, go to reinvest.co. We are ending the fundraise at the end of the month. The board decided that. I called them up. We have a board meeting next week, but I thought it was prudent to call them up and go, we need to decide on this now. And so I put all the, I pled my case to our board members, and they're like, Kevin, you should end it December 31st. So that's what we're doing. All right, folks. Appreciate y'all being here. Seriously, good luck out there. I love y'all. And no matter what happens, always remember that your boy Meat Kevin's here with ya. And we'll make money together and we'll lose money together. But I'll be reporting on everything together with ya. We'll see ya.
I think that Kevin's a brilliant guy, and I think that we'd all be very lucky to have him.
Kevin is very talented, but I don't know if it's going to be him, but he's a very talented guy.
Kevin is much more interested than most people, by the way, in the balance sheet.
Kevin's somebody we'd consider.